raising capital and crowdfunding in the era of the coronavirus. So Tunde and Cheryl, great. Thank you very much. I think you're both unmuted. I'll take it away, and yeah, I'll be joining them for this next 30 minutes. I know they're going to give a presentation, and we're going to talk about they'll talk about raising capital, and I'll ask some provoking questions that'll pull. I think we've talked about it once before earlier today. I think crowdfunding definitely has the potential to usurp venture capital and be a real catalyst for early stage founders. So I look forward to hearing more about that. So Cheryl and Tunde, I'll pass it to you.
Sounds great. Thank you so much, Sergio, for the opportunity. This has been an amazing day so far, and we'd absolutely love to tell you a little bit more about what Republic does. First, we'll just introduce ourselves a little bit, and then Tunde can go ahead and actually present. So my name is Cheryl Campos. I am a principal on the investment team here at Republic. We are essentially an investment platform that allows anyone to invest in startups. So on the one hand, startups can raise $2 million in capital, while at the same time, anyone from around the world can actually invest in a startup, which previously wasn't allowed until 2016. But Tunde can go in more into the specifics. In terms of why I'm personally here, I was a Harvard grad 2015, went into banking, then I went to private equity, but found really my calling through Republic, especially because it levels the playing field. So 40% of our founders are women, 20% are Black and Latino, and they hail from over 27 different states. And so that was something to me that using fintech in order to do social good was something that really appealed to me. So I've been here for about 2 years, and I'll let Tunde talk further about what who he is, what he's doing, and then we'll go into our presentation.
Hey everybody, Tunde here. I also sit on the investment team. Just give a quick background on me. Originally from Denver, Colorado. Spent some time in the Chicagoland area. I went to Northwestern where I studied econ, psychology, and integrated marketing. Moved to New York City after doing an internship in finance and spent about 2.5 years at an investment bank on Wall Street working in the sales and trading division. Ultimately was not super kind of fulfilled in what I was doing there. I felt like I was sitting in between different groups of rich people and making them richer. So I wanted to kind of find a way to, help entrepreneurs who are building the next kind of generational impacting and generational changing companies do so through the platform. So I was looking at different opportunities and came across Republic, and I really loved what we were doing in the space. I've been here for about a year now, sitting on our investment team, basically working on sourcing companies and founders, and then helping on the due diligence process for companies that are looking to eventually raise on our platform. So I'm going to go ahead and share my screen and kind of dive in a little bit into how we go about doing it.
There you go.
Can you guys see my screen?
I don't see it yet.
Let's see. One. Sorry, give me 1 second here. I think a little bit of a technical difficulty sharing my screen. Can you guys see it now?
Nope. Oh, there we go.
There you go. You can see it now?
Got it.
Awesome.
Yes.
Okay, great. I'll go into presentation. Awesome. So yeah, so today we're going to talk about, raising capital in the era of Corona, and also kind of just leveraging a new alternative fundraising channel, which is Republic. Kind of already gave, quick background on me, went through all of this stuff. There's some interesting tidbits at the bottom there. I DJ, really big into music and music tech. So if that's your fancy, we should definitely chat after. But yeah, as a quick introduction to Republic, what we are is we're a platform that helps startups raise capital and also helps people who are looking to deploy capital into private companies. We spun out of AngelList in 2016 with some seed funding, and our CEO and one of our 4 founders, Ken Wen, was general counsel at AngelList before he got some initial capital to really build out and spin out Republic with the mission of opening up access to the private markets for both founders and investors alike. So Republic allows investors regardless of their income, net worth, or accreditation, I can never say that word, status, to invest in startups. So what we're kind of doing is allowing everyone to become a mini or micro angel investor. We basically connect investors with a highly vetted pipeline of companies that are looking to raise capital from our network of over 400,000 investors. And we traditionally provide, a level of deal flow that is kind of outside of the normal scope of what you would see in, traditional Silicon Valley technology style companies. So the way that it works, kind of a quick background. So Republic is able to exist under Title III of the Jobs Act. That was a piece of legislation that was passed under the Obama administration in 2012. And then enacted into fruition in 2016. And all that was a piece of legislation that created a framework to allow non-accredited investors to invest in the private markets through regulated funding portals. So Republic is one of these regulated funding portals, and we allow people to invest as little as $10 into a private company and as much as $100,000. And what that kind of translates to on the startup side is now startups can raise up to $1 million annually from anyone. So, your all the way from your seasoned angels to kind of like your retired lawyer, doctor, people who are accredited investors who want to kind of dabble and put their foot into startup investing, down to friends, family, customers, people who follow you on social media. So it's a really, really powerful tool to kind of engage your community while also raising capital. And then a quick note on this $1 million annually. Last week, actually, the SEC announced that they are proposing to vote to increase the cap that startups can raise through regulated funding portals from 1 million to 5 million. And we're really hopeful. We've been a really pivotal kind of player in that conversation. Our chief compliance officer was down there talking with the head of the SEC. They call her Crypto Mom. It's like her street name. But we're really hopeful that, these measures can be enacted somewhere in the next, 8 to 12 months. Because we think that could be a very, very powerful tool for companies who are looking to kind of raise capital to get off the ground. So what are some of the benefits of leveraging Republic? Republic really sits at kind of the intersection of not only finance, so being able to raise capital, but also marketing. So we kind of touched on all of these different groups that can participate in your round: friends and family, angels, retail investors. But at the same time, there's a really strong, powerful benefit from being able to advertise and open up access to your investment round to this network, right? So there's kind of like the physical marketing in terms of getting the brand out there, maybe on like a product. For example, CPG companies will sometimes advertise that they're raising on Republic on their actual physical products that are in the shelves and stocked on in store, so that when people are trying out their products, if they like it and they want to invest, they can go directly to the website. There's also digital marketing, so leveraging social media, different influencers, reaching out to do like a drip campaign to a newsletter or listserv. And then there's also kind of like reward campaigns, providing perks, and of course, like your natural PR, branding, and press that can come from, the idea that a major company or any company that's local to a community and really has really strong roots and ties into that community is now raising capital from everyone. And one thing to note about Republic is that it is complementary to other types of fundraising mechanisms and channels. So a lot of times people think that if you leverage Republic, it's either Republic or traditional venture round or raising from like a institutional investor, but it's definitely possible to do both. We've been really thoughtful about the way that we have structured our instruments and how that they work for founders to make sure that it's not going to hamper or burden a founder on their growth journey if they want to go on to continue to raise capital. So yeah, Republic doesn't limit a company's ability to raise capital via other types of sources or securities offerings. The instrument that we use most often is called a CrowdSafe. I'm not sure how familiar some of the founders are or who are on the line are with the traditional safe, but it was created by Y Combinator back in 2010 or 2012, really as a way to help startups that were going through their program to be able to raise capital quickly and efficiently. So prior to then, the primary instrument that most companies had been using had been a convertible note, but kind of structuring and agreeing to the terms of a convertible note it can be really clunky. And when you have these Silicon Valley companies that are raising rounds, very quickly and growing at an extremely fast pace, founders don't always have the time to do one-off negotiations with individual investors. So they created the SAFE as a really quick way to help companies raise capital. And then basically what we did is, because our founder, Ken, is a securities attorney, and there's at least 4 securities attorneys who work at Republic, we basically took all of that and put some legal engineering into building an instrument that would take the traditional SAFE one step further. So that's what the CrowdSafe is. It's basically an instrument that does 3 main things, and there's 3 main differences between it and your standard SAFE. So the first difference is that the CrowdSafe aggregates all investors into a single line item on your cap table. So whether you have 5 investors or 5,000 investors, it doesn't really matter. All those investors get put into a single line item, and they effectively act as if one investor had written you one large check. So really clean and really efficient, especially for companies that are going to continue to raise capital following their round on Republic. The second difference is that the CrowdSafe minimizes the voting and information rights that Republic investors receive. Right, so you can imagine if you're let's say you're a traditional angel investor, you're investing a $50,000 or $100,000 check into a company, you're going to want to know what's happening with that company, and you're probably going to want to have a direct line to the founders. So there's somewhat of a trade-off in between, you know, the check size that you're writing and the level of kind of like access to information that you do have. So the way that the CrowdSafe works is that rather than having to send, you know, individual K1s to, you know, a couple hundred or a couple thousand investors who are participating in your round, we provide a technology and a platform that allows you to kind of send and distribute these updates to investors at mass and at once. So you don't have to worry about having all of these small investors in your inbox or flooding you with questions about what's happening with their investment. You can send those quarterly updates through Republic, or at the end of the round, you can gather your investors' information in a CSV, and you can upload that information into your own systems and kind of keep them updated on a quarterly basis as you would like. And then the third and final difference between the traditional SAFE and the CrowdSafe is around conversion. It's really important because this is kind of how we're able to keep it as one line item on your cap table. So whereas your traditional convertible note or SAFE instrument normally would convert upon a qualified event. And for most companies, that's just the next time they go out to raise capital. It's normally the next qualified financing event, which in context just means like if I raise a pre-seed round, investors who invest in that round via a convertible note or a SAFE note will convert when I get to my seed round, seed to Series A, et cetera, et cetera. That's how the standard instruments work. With the Republic CrowdSafe, conversion only occurs upon some type of liquidity event. So that's an event where investors are able to kind of get their money out and receive some type of return on their initial investment. The normal liquidity events that we kind of view are an acquisition, an IPO, a merger, or a change of control. Those are the 4 primary events that we normally consider and qualify as liquidity events. If one of those things happens, investors who are invested through the Republic CrowdSafe are able to earn a return. Up until that point, though, they're just investors who are maintaining, you know, the upside of the company's kind of growth and continued fundraising, but they don't actually realize equity. And that's how we're able to keep it as a single line item on your cap table, because as per SEC regulation, they don't have to be classified as holders of record. So there's a lot of like legal and technical jargon that we can kind of get into, but if you'd like to touch base on that, we can touch base on that offline. So a quick portfolio overview. Republic has been, again, in existence since 2016 when we spun out of AngelList. In that time, we've helped over 130 plus companies raise capital. These numbers are slightly outdated. They don't really factor in kind of the growth that we've seen through in the first quarter of 2019, but that number is probably closer to 150. And on the capital side, it's probably closer to 45 million. But the really impressive thing and what we're most excited about is that last year, the average raise for a campaign on our platform was north of $500,000. So it's really validating to our model. Before 2019, we hadn't had any companies who'd raised $1 million on the equity side. We had some companies who'd done it through you know, other instruments, but none on the equity side. Happy to announce that we've now had 11 companies who've raised a full $1,070,000 through our platform. So a really exciting time to be kind of leveraging this as a part of like your fundraising and your growth. Our portfolio includes a lot of noticeable venture capital firms and accelerators. We work really strongly with different ecosystem players like 500 Startups, Techstars, Y Combinator, Mass Challenge, and Cheryl can kind of touch on, a little bit more of our partnership strategy and kind of how that works. But just know that, we do put a lot of thought and emphasis into trying to provide, access to the highest quality deals out there, and some of the most notable deals that are out there at an early stage. One of the other things that we're really proud about is that there are tons of benefits that our kind of portfolio companies and Republic alumni receive once they raise and after they go on to raise. Most notably is the customer acquisition. So we kind of touched on how Republic really sits at the intersection of capital raising and marketing. So when companies raise capital through us, they often see, tons of visits or tons of traffic directed to their website, to their social media pages. A lot of investors will actually, sign up for a product or a service or order a product to really kind of like try it out and test it on for themselves, and then become kind of loyal customers or ambassadors after that. And then the most important thing that, especially as a founder, what you're probably concerned with is, what happens after your round. We're happy to announce that, we have a very significant portion of our portfolio that has gone on to raise follow-on capital. A couple examples of that are Sapient, Ample Foods, Ballooner, Parlor, and tons of others that we can kind of name from really notable venture firms, including Bain Capital, and a bunch of others. And then the last thing is that that we should touch on is that Republic's mission is really, open access to everyone. So that's what I mean on the slide when we say diversity is in our DNA. Since inception, 40% of capital has gone to female founders, and 20% has gone to Black and Latinx founders from a variety of different states. So what Republic is really doing through our platform is really opening up access to people who traditionally have been locked out of the normal venture capital process, and giving them access to that capital so that they can go out there and build really innovative companies, serve the communities that they are entrenched in, and really kind of, create value. There's this whole asset class of founders who are underfunded but overperforming, and Republic aims to be a very viable source of capital for those guys. So if you're a founder, you're probably wondering how you raise on Republic. There's a couple different ways. So all companies, anybody who wants to raise on Republic can apply on the platform. But before you apply, there's a couple things that we'd like you guys to think about. So the first thing that you should think about is kind of, do you meet the scope of Republic's criteria? So while Republic does, aim to open up access to the markets, it is for anybody to leverage and to raise. There is a specific kind of niche that we are looking for at least in terms of kind of like who is ready and what stage it makes the most sense to leverage the platform. So the things that, I'm looking for on a day-to-day basis when I'm talking to companies, either on the phone or at events or, via email, are the 4 T's. So team, traction, their technology, and then kind of sometimes the theme. So the first 3, I would say, are the primary things that we look at. So who is the team? What is their expertise in this space? And how likely do we think they are to get this mission off the ground successfully? Traction, what is the evidence that you have of the ability to kind of grow this company, and also to get people to actually pay for your product, right? Republic isn't really a great fit for people that are just like a slide deck and an idea. We do require that companies kind of in market with some traction, and some evidence that they're working towards building something that is scalable and that is an investable opportunity from an investor's perspective. And then the technology and the product, right? What are you building? What's the market that you're operating in? Who are the competitors? What is your kind of unique, unfair advantage within that market? And then oftentimes there is a theme, right, along the lines of kind of either diversity or social good, social impact, and things of that nature. So all of this gets considered holistically when the investment team, the due diligence team, and ultimately our investment committee decides to evaluate an opportunity. And those are kind of the 3 different, I would say, tiers or checklists that companies have to check before they raise on Republic. So all companies have an initial conversation with someone on the investment team, If we think they're a good fit and we'd like to learn more, we'll introduce them to our due diligence team, who will kind of, we'll take a deeper dive into the company. We'll request some high-level financials to do a review of the company's kind of background and make sure that, what they've told us on the phone aligns with the picture, the financial picture. And then ultimately, we create an investment memo, present it to our investment committee, who has final say as to who's able to raise on the platform. Once you pass investment committee, we'll extend a campaign agreement. It's a non-binding agreement, basically outlines how we'll work together, that we then begin the process of preparing you to launch a campaign. So as a part of that process, main steps are filing a document called a Form C with the SEC. That basically is just a high-level overview of your past 2 years of financials. And ultimately, the Form C, in one line, just declares with the SEC that, hey, we are now taking in capital from both accredited and non-accredited investors. You'll work with our onboarding team to create that campaign page for you, and then our marketing team to set a strategy for how to, best leverage your network and our network to drive maximum capital into your offering. And then Republic, just to kind of quickly touch on fees, Republic is completely success-based. So we don't take any fees upfront from companies ourselves as a platform. We only take fees on the back end when a company has successfully raised. So that's kind of why we do a little bit of that, thorough vetting and screening on the front end, is because, the way that our structure is set up, it aligns our incentives to make sure that what's in your best interest is in our best interest as well. A couple examples of a company that have raised successfully on Republic: Fatima Dico, former Columbia grad. Her company Jetpack is a peer-to-peer platform that allows college students to get products that they need very quickly on campus. So let's say, you walked halfway across from North Campus to South Campus to the library, but you forgot, your pen or your pencil. You can order one directly to you wherever you are. She raised on the platform, I believe, in 2018, and was able to raise, $250K from over 800 investors. Really gained an immediate network all across the country, and was able to build brand ambassadors on different campuses that could spread the word and help kind of build the brand. So this is an example of a company that we've helped to traditionally, might have been not as recognized from traditional firms or institutional funds. Here's a quick founder testimonial. I don't think we have time for that, so I'll just skip past that, or not. And yeah, we can get to next steps. So in terms of how to think about Republic, I think the first thing that you'd want to do is really understand your business, and understand kind of like what are the capital needs of my business, and what makes the most sense for me. Is it going to venture? Is it taking out debt, or maybe a profit share, revenue share, or maybe leveraging Republic? Kind of as you're thinking about that, some things to consider is am I comfortable allowing VCs and other institutional firms to have control in my company and have a say into what I'm building, and how long I'm able to execute my growth strategy. And are you also comfortable with the long-term commitments? I think there is a certain level of sexiness that is associated with raising venture. But the reality is that venture capital is not for everybody, and shouldn't be for everybody. Not every company is made to go out and raise from a venture firm. So some are. So give that some thought and really understand kind of what are your growth goals? What's the timeline for that? And what capital source will fit best into that strategy? And then also thinking about what are your marketing strategies and general fundraising strategies, and does that kind of align with Republic? If it does, then the next thing to do is to kind of assess the 4 T's framework and see if you're ready to apply. If you're unsure, you can always send us your deck and get some feedback. We're always happy to do that and kind of work with founders to kind of give them a sense of where they fit, what metrics they need to hit, and when makes the most sense to leverage a Republic campaign in their strategy. And then from there, the next thing is to just set an actual strategy. So figuring out, where in your total fundraising journey can Republic fit. There's a lot of different use cases. Sometimes people will use this before their round as a kind of their only source of capital. They'll use that to kind of build up some momentum, work on the customer acquisition, really focusing on hitting and honing on those metrics, and creating awareness for their brand before they go on to raise from traditional sources. Other companies will use us during their campaign as a way to kind of be flexible, right? So you might say, Okay, we're raising a $750,000 pre-seed round. We want 500,000 of that to come from pre-seed funds, and the last 250 to come from Republic, so that our friends and family and customers can invest. So that's another way. And then the final way is kind of as a way to top off their round. So maybe you've closed your round, but there was some people who came on your radar that you wanted to let in, but you couldn't let in because they couldn't reach the check size. So Republic's a great way to do that. And then I would say there's actually a final use case for more mature companies who are really just using us as a marketing strategy because they want to promote, inclusion and access from their communities. So you can think of like, for example, Uber or Airbnb allowing their drivers to invest or to give away equity to their drivers, or for Airbnb to give away equity to their hosts. That's also a good use case. And we have products that meet more mature and more grown companies that are really just focused on marketing and community engagement. So yeah, that is it. Here's our contact information. If you want to check out the website, see companies who are raising, you can check it out at republic.co. My email and Cheryl's email address is there below, and so are our Twitter handles. And yeah, I would look forward to taking any questions that you guys might have. And if there's anything you want to add, Cheryl, please feel free.
All right, thank you, Tunde. I am just waiting to see if I don't know if Cheryl is on the line, but yeah, can you share a little bit more, either one of you, on, I feel like I've been watching the crowdfunding space and you guys for a few years now on, what do you see it like? Where do you see it now, and where do you see it going into the future? Like kind of talking like, yeah, we're in a unique time now with with the pandemic, but assuming we're resilient and we're going to get through this, like where do you see kind of like one step back, the place of crowdfunding in the market?
Yeah, I can take that one. So for us, we definitely feel like depending on each business, there is a place for Republic to exist. So within the capital continuum, anywhere from like the angels at the very idea build stage, and then you kind of have Republic in the middle with the VCs as well, that once again, as Tunde mentioned, is complementary. So sometimes Republic can be used to top off a round, like in order to bridge, to go to the next round, or after a round, or for marketing purposes. So for us, in 5 years, our mission really is to be, the Amazon for private investing.
Awesome.
That's our little tagline. And so in that way, anytime that you see a company that you really love and they're, raising, you can just easily go ahead and with 3 clicks, you'll be able to invest in them. So at some point, we'd like to be the one-stop shop for fundraising for any person that's fundraising out there. But at the same time, we know that there's a space for everyone involved. So that's kind of our goals in the next 5 years. So hopefully we'll see them through. Yeah,
and just to kind of support that, I think when you think about what the future of the industry holds from a broader perspective, people are seeing that in the public markets, there's less and less value to be had. I think there's still value in having the public markets as a part of your portfolio, but it's no understatement to state that a vast majority of wealth creation that's being generated for a small number of people in this country is in the private markets, right? You can look at Uber as an example, where people who invested as little as $5,000 in that seed round, the day it IPO'd, became instant millionaires. But in order to be able to invest, you had to be super wealthy, and you had to be well connected to even get into that round. And so I think the general industry and the general market is moving more towards like access and inclusion, and allowing your everyday people to invest with certain restrictions, right? Like, it's a very dangerous asset class. Not every company is going to be an Uber. And so you want to be careful about, how much access and how much of, people's life savings are being put into this asset class. But generally speaking, I think people are moving more towards like allowing, regular everyday people to have some way to get some capital on this. And I think there's no better example to look to than kind of more developed markets like Europe, and even like Israel, where there's platforms where companies can raise. If you look at the UK right now, companies can raise up to $8 million through established platforms like Seedrs and Crowdcube. And the best example for what I think is the future of this is Revolut. It's a company that's a digital payment company within the UK, and really focused on like digital payments in the remittances space. And now I think they're moving more towards like a digital first or digital native bank. But as it relates to this, they just raised $500 million at a $5.5 billion valuation. But back in 2016, the founders really, like, as they were raising capital, they really wanted to allow people to have access. So all the way from their pre-seed through their Series B round, they allowed investors, every time they would raise, they would allow investors to invest through a platform, Seedrs. And so in 2016, there was an opportunity for you to invest as little as $10 into their round at a $58 million valuation. Like, imagine you have put $1,000 into that company. You know, even though it's unrealized now, you can kind of think about that's probably like, that's what, north of 2,000%, almost 2,000% return on your initial investment. So I think there's already a framework for this in other developed markets. And I think the US has just been a laggard and been really conservative, but hopefully we move closer to that type of model.
Great. Awesome. Well, I think we're just at time. So I wanted to thank you both. Thank you, Cheryl. Thank you, Tunde,